100% an expectations game. It doesn't matter what the number actually is, it's the expectation of future growth or setting yourself up for some sort of like, hey, look, we did better than we thought, right? So if you guide the future lower and you come in at expectations, then nobody should be disappointed. Hey, we told you it was going to suck, right? Why are you mad, right? And then the market doesn't really do anything. If they beat the expectation that they set for themselves, then guess what? The market's euphoric. And oh my God, can you imagine? They said, oh, we're going to contract by about 2% on the bottom line, but they beat it by 1.5%. That's a huge swing to the upside. Rock and roll, all in, right? That's basically what guidance does. And of course, it's dangerous on the upside too. You guide higher, you excite people in the here and now, then you have to hold yourself to those standards, right? So anyhow, that is the guidance thing. If companies start pulling their guidance and just not issuing guidance at all, that's because number one, they just have no idea what's going to unfold. So a question mark, right, which is no good. That's uncertainty. That's fear. Or number two, they know it's going to be so bad that they don't dare influence the stock price to the downside in the current day because they're fearful that if it does get worse, they're either going to be their guidance, which is negative, is not going to be negative enough. So they will not guide to the downside if they understand that it's going to be so bad, right? Something that's mediocre, a little bit of a slowdown, not terrible. But oh my God, it's awful out there. They're not going to open their mouth. Not at all. So these two reasons are why, if guidance starts getting pulled, you should take that seriously out of equities here. So we'll watch out for it. All right. Jamie Dimon, he kicks us off Friday morning tomorrow before the open. Let's kick things over to the Fear and Greed Index. We're off the 3 handle that we printed yesterday. Remember that this was down on a 3 with the 84% reciprocal tariffs from China, with the announcement from Don T himself that, hey, things are going on a 90-day pause officially. You can see we're at 16. Not extreme greed, but 16 gets us still into extreme fear. We'll talk about how we can find the capitulation low and if it's going to hold here and if we should be buying dips in just a moment. We'll get to that. All right. That is that gauge. We've got about 10 minutes to go still until the numbers are actually released for CPI. So let's take a look through the top line figures courtesy of CNBC. Let's see what we see. But before we do, perhaps, let's scroll up here a little bit. Cayman trades with the 11 months locked in at 2,500. Stop loss up 6,500 this morning. There you go, Cayman trades. See, maybe all it takes is a little bit of a... I'm going to write this down. We're going to call you out in particular every morning to make sure that this continues to go well. Because that's just a great display of, that's trading responsible. That's making it real. So kudos to you, Cayman, who, of course, we know what's going on there. And you got to do the same thing today. Keep it real. Make it real. Make it hit that account. Jeffrey Jones with the 499. When will tariff pause news be reflected in the Michigan Sentiment Survey? What release Friday? I don't know if it'll be reflected in the survey. I don't know when they ultimately do the poll versus when they release the data, Jeffrey Jones. So we'll watch out for that. But that's actually a great call. That is actually a great call. If it does come in, if the sentiment survey comes in better than the expectations, then maybe it's like a one-day turnaround and people are being polled on the Thursday, release the report on the Friday morning. I would think that's a quick turn for a big sentiment survey like that. But anyhow, we'll see. We shall see. All right, let's get over to these top-line figures now and see what's going on. We've got 10 minutes to kill before the CPI print comes out, and we'll watch the live market reaction together over on something like an ES 5-minute time frame chart. Dow futures down 138 basis points here this morning. S&P futures down 184 basis points. Nasdaq futures down 231 basis points. If you didn't know otherwise, you'd be like, oh my God, this is like, the market's exploding. I can't believe we're down over 2% on the Nasdaq. Well, in reality, we're pulling back from the euphoric high from yesterday, which is completely reasonable. You have to remember annual gains on average for the S&P. And I get it, like not every, when you annualize the data, yeah, it comes out to 10%, but it's actually very rare that on any individual given year, you actually get a 10% return out of the S&P. Usually it's way over or way under, right? And that averages out to the 10. But you have to understand that after a 10% gain plus to the upside, is it okay to pull back 2%? I mean, come on. Come on. Yes, of course it is. Anybody who is buying the monthly high or low at 4,800, and we talked about this, I was buying it there on the, Monday's gap down, sort of testing and probing down into that low. I was buying it in the long-term account. I had a decision to make when I came back from the run yesterday. Am I going to lock up the gain here up, 11, 12%? Or am I just going to let it go? Personally, it's a longer term account. I'm going to let it go. I'm not going to lock up the gain just on the rally we've seen. I'm really, the idea, the goal of that account would be to try to navigate to a brand new all-time high and beyond. So anyhow, point being is that these numbers might look horrible, but goodness, on the back of a 10% rally, we've got nothing to worry about until we can start seeking that higher low on something like the daily or hourly time frame chart, right? So we'll watch that. Oil futures down 302 basis points, but again, on the rally yesterday, still up around $60.47 a barrel. US 10-year is down 7 basis points, and that gives us 4.326 on the actual yield itself, still higher relative to the sub 4% reads that we were getting earlier amidst all the panic and fear. All right, let's go ahead and scroll down. Let's quickly go through the headlines. It's 8:22, 8:23 on the clock here, which is fine. We know we have some time to kill before 8:30 and the news is released, so let's take a look. Economic advisor from Trump says that the bond market added a little more urgency to the tariff decisions. It's live updates. European Union to put countermeasures to the U.S. tariffs on hold for 90 days. Right, this 90-day pause is sort of resolving things globally, which is solid. Trump walked back his tariff rollout, but is the damage already done? I think that people are going to be a little upset about, getting jerked around a little bit and oh, it's this, and holy crap, we got to, reevaluate everything, and oh, no, it's this, and okay, now we undo this and put it on pause. And I don't think anybody's happy about, stirring the pot like that, but if you ask the administration, right, it's just the art of the deal. It's the art of the deal, and if you ask Bill Ackman, it's the most brilliant thing he's ever seen. A global commodity sell-off is flashing warning signals for the world economy, right? That's, of course, your growth concerns. Roller coaster week for global bonds continues as the Trump put sparks reversals. Dow futures drop 500 points as they give back some of the historic turnaround. Again, 500 points in the context of what? An insane rally. So, let's take it easy there with the headline there, CNBC. Jeremy Siegel says stocks are not out of the woods yet due to difficult China negotiations. Tesla price target cut from 3 Wall Street shops. So Tesla, no love out of that. CEO Andy Jassy from Amazon, it's too many A's, says AI costs will come down over time even as the company invests aggressively. That's we've known this since the dawn of time. AI will become a commodity at some point, and it's going to be less about the models and more about what it's actually doing. Anyhow, it's these hyperscalers, they'll get all the cloud infrastructure where people run these things, but the actual model builds themselves. You're talking about prices coming down aggressively, right? Cost per token going to come down aggressively. Oil prices fall more than 2% as traders focus on escalating China trade war. Of course, win-win deal with China from Ray Dalio. Salary cap for the MLB. I don't know if that's ever going to happen. Bitcoin to hit $250,000 in the Magnificent Seven to adopt stable coins, Cardano founder predicts. Oh, my God. All right, sure thing. We'll see. We'll revisit that on December 31st. Dot-com burst, 1987 crash, had massive relief rallies similar to Wednesday's pop. I mean, that is true to some degree. If you look at the Great Depression as well, in the 1929 Great Depression, some of the counter-trend rallies that unfolded were 20% pops. Now, I get it. We were dealing with a much cheaper market back then. It might have been, air quotes, easier to get a 20% rally, but it is true. It is true. We're not out of the woods yet, but things do look good for a particular spot where I'm going to start using as a line in the sand. We'll talk about that in a moment. Stimulus checks. More stimulus checks. Didn't we learn our lesson on that the first time? Toast gets a double upgrade from Wells Fargo. Wells reports earnings before the bell on Friday. Trump morning buy call nets huge returns for those who listened, right? He's going to be under investigation for that big time. There's a lot of people who are not happy with the potential for, quote, insider trading. So watch out for that. What else? Newsmax coverage is defamatory. That's from a Delaware judge. Everybody's moving out of Delaware anyways, and going straight to Texas in terms of businesses. There's Bill Ackman bending the knee. Thank you on behalf of all Americans. The most brilliant deal I've ever seen done. Shipping giant Maersk as bellwether for global trade soars on the tariff pause. Right there you go. Thinking that things will be open for business here. Amazon delays the first internet satellite launch due to bad weather. Market rips higher. China consumer prices decline for the second straight month. Producer deflation deepens. Direct deposit for your tax refund April 15th next week. It's your deadline if you haven't done it already. Tanking oil prices could double Saudi Arabia's deficit hit spending plans, and Goldman Sachs economists predict that. Okay, no sponsored credit card slot this morning, reminding us of the tax deadlines. Let's jump on over to, we've got 3 minutes to go until the news release, just FYI, right? We are waiting patiently, 8:30 in about 2 minutes, 45 seconds, you can see here. We get the CPI report as well as the jobless claims. We'll watch out for this closely. Let's jump on over to the screens, though, and let's just quickly take a look. Real quick look at the 4-hour time frame chart. See what we can't see from this perspective over here, and whether or not we should be thinking about anything out of the gate. So, quick reminder, if you haven't hit the thumbs up button already, I don't know what you're waiting for. If you're not subscribed to the channel, what are you waiting for? We're live every morning, 8 o'clock Eastern time. Whenever we have big news announcements, we do have coffee and donuts. I'm paying the barista extra this morning, so go help yourself to something nice. 8:27 on the clock, 4-hour time frame chart. I mean, the chart really speaks for itself. All the pattern traders shouting from the rooftop, myself included, hey, it's a double bottom, and it's very possible that a brigade bolt over the neckline here at 5,300. 5,300 is your big bad line in the sand, right? And everybody can see it. 5,300 is not a special level. It does not take a rocket scientist to see this level. If we go to the hourly time frame chart, we can see it here. It is the Friday high of day. It is the Monday high of day, the Tuesday high of day. We blew right through it. We closed the overhead gap to the Thursday low. This is the only remaining gap. This is from the Wednesday of last week to the Thursday of the prior week. And from there, right, we have a couple of different options. And keeping in mind, again, we've got about a minute and a half to go until the news. We'll get down to a 5-minute chart, don't you worry. Either the market pulls back, tests 5,300, finds buyers, and rallies to the upside. Great, we have a potential higher low. If we move through that, there's thin structure through this blue box. The blue box, of course, representing single prints from the H period on market profile. If we move through this with a lower high underneath, then we're just inside the balance range. And what do we have? Look above and fail. In theory, it's very possible that you come back down to the bottom end of the range. So this is really key. 5,300 is key. I would also say the single print closure is key as well, the origin of the rally. With about 45 seconds to go until the news comes out, CPI, let's zoom in into a 5-minute time frame chart. 5-minute time frame chart. Here we go. All right, let's see exactly what happens here in the next 30 seconds for our inflation print. It's your final call. You got 30 seconds to go grab yourself a coffee, grab yourself a donut. I'm going to take a swig of my coffee, and we'll see what comes of it. We will see what comes of it. Remember, what we're looking for is on the core, and this is month over month, a 0.3. Core, year over year, we are looking for a 3.0. All right, that is what we have on the core side. The non-core, year over year, let's just do this, is a 2.5 is what we're looking for. And on the non-core, we're also looking for a 0.3 month over month. All right, actually, I think this one was different. Was it a 0.2 on the core? Anyways, 8:30, numbers are out. Market's moving slightly. It's sort of locked up here, which is never a good sign. It means that the book is very, very thin on the actual print. Let's see. Let's see how this thing unfolds here. About 30 seconds post-release, and not really seeing anything that's very substantial here. I mean, relative to the pre-market volatility we've seen already, just really, really tame candle. I mean, yeah, we're still dealing with a 20-point y-axis, but remember, we're dealing with a day yesterday that was up over 10%. So let's take a look. JC, do we have the update in the chat? Let's see if our senior news correspondent has us covered here. And then ahead of that, we had Dexter with the 5 in the chat. Best guy out there. Thanks for the help every morning. No problem, Dexter. Hopefully you're doing well. No post yet. Let's see what we got here in just a moment. We're keeping an eye out. All right, U.S. core CPI month over month. Actual comes in at a 0.1. We had a forecast of a 0.3, right? That's a good beat. Year over year, actual 2.4. 2.4, that is the year over year. Another solid beat by about 10 basis points there. Forecast was 2.5. We have the month over month. Was that the, hang on a second. CPI month over month. Core CPI month over month was the 0.1. So this is core. This is non-core. Let's see. You know what? Let's just do it because we need to look at the report as well. Instead of just drawing on the chart here, let's go look at the report. So we've given this about 120 seconds to play out. And you can see that the markets are moving in the upward direction on inflation numbers that are seemingly better than the expectation. All right, so let's jump over to the charts here real quick and take a look at the actual dashboard. So over here, we can start here, right? This is a fine start, which is great. You can see the beat out of the core month over month. You can see the negative. This is deflation on the non-core month over month. The year over year non-core beats by about 10 basis points, so that's solid. The jobless claims come in directly at the expectation of 250.
Order filled.
Another decent indication for the markets. Yes, a little bit of an uptick, but at expectations is good. If we blew past expectations to like a 250, 245, no bueno. No bueno on that. So all set out of these initial reads. If we go on over here, we want the actual on the core year over year at a 2.8, prior 3.1. Remember, forecast was for a 3. So really, really solid here out of the inflation metrics. And if I just open this up, right, the concern of the market was that if we go here, is it the core or is it the non-core? It might be the non-core. Generally, the market was really concerned that we were finding a floor at this 3% mark, right? This is what everybody was freaking out about. And you know, rightfully so. It's like, okay, 3% is not the Fed's target of 2%. So higher for longer is going to have to persist, right? And we knew that this was a concern as soon as the bond market started pricing in more aggressive rate cuts than what we know the market should be able to handle. So now if we go to inflation rate year over year here, this is the non-core, right? And now you can actually see the acceleration to the upside, which has decelerated quite substantially. So nice push to the downside here out of CPI, really rolling over. And
order filled,
continuing this trend in the upward direction, right? And Jerome Powell may come out, and I would honestly love it in his next appearance if he comes out and makes a little bit of a joke. I don't want to hear about his purple tie jokes. I don't want to hear about the Grateful Dead and what was the it was Dick, right? As in Richard is the guy's name, I'm sure. Dick's picks. I mean, why were we talking about that in the last press conference with Powell? I want to hear him joke around about, yeah, you know, one report doesn't make a trend, right? Because that's what he was famous for saying back in the sickness era. It's like one report doesn't really make a trend. Let's kick the can down the road, right? So it would be funny if he mentioned that about this in here. Anyhow, that is what we have going on with the actual prints from the inflation rates. Let's go ahead. It's always going to be purple, Miles. It's always going to be purple. That tie is never changing colors. Let's take a look at the latest release here of the CPI, though, and let's take a look at the detailed report. This will be fine, actually. Do we want the detailed report? Can we find it? Is it going to be down here at the bottom? Let's see. Detailed expenditure category. Do we want that? Yeah, let's do it. I hope this is percent change. It should be by default. Yeah, okay. Percent change. These are the detailed categories. So food, all items. You can see that the change here was a 0.4. Okay, not really a great print, but apparently, as we scroll down, let's get out of food and maybe get to our next detailed report. Let's honestly go back. We want a little bit of both here. Detailed report will be fine. Maybe we'll look through it over the weekend. But energy, here we go. Big deflation out of energy. You can see down. This is the annualized. The March print is right over here. Energy still deflating on the month over month. So down 2.4%. As we look at gasoline, all types down 6.3%. So expect cheaper prices at the pump. Really funny, actually. Over in Georgetown, there's a gas station, and I swear to God, it doesn't matter what's going on with the price of crude. It doesn't matter if you could get gas for $2 down the road. Their price is going to be $4.99. That's it. Never changes. Never changes. They figure, yeah, you know, we're in that area, right? So anyways, 6.3% month over month down. Interesting stuff. What else is happening here? We have all items less food and energy. Really mild inflation on that. What else? Don't swear to God. It's a bad thing. Okay, take it back. Take it back. Services. We can see services less energy services over here. That's a solid print. That's a really solid print. Shelter also moving in the right direction, not printing another 4%, or a 0.4, I should say. Not 4%, but 0.4. 0.4 is what we really needed to avoid. So this 0.2 on the shelter side of the inflation equation, really, really solid. Remember that's what the market's looking for right now. There's this big chart. I don't know if I can even pull it up anymore. Actually, I probably can. Let me see if I can pull this thing up real quick. Let me see if I can't find what I'm looking for here. Where is... Oh, here it is. Here it is. Let's see if I can pop that here. There we go. So take a look at this chart, right? Take a look at this chart, and you can see this is the Zillow Observed Rent Index in green. Zillow Observed Rent Index in green here. This thing ticking higher, or at least flatlining, was sort of hurting the case for inflation, right? This is PCE, not CPI, but you get the idea. It was hurting the case for inflation to continue falling as this has started to baseline. But as we just saw in literally shelter right here at a 0.2, I'm not going to say that it's like deflating, and I'm not going to say that there's massive disinflation, but it's just helpful that you're not seeing a 0.4 on that print anymore. So that is interesting. It looks like there's some comments in the chat that says that the market is tanking and moving to the downside here. We'll take a look. We've got to flip back on over. From Trader SLA, how concerned am I with the increasing global debt crisis? I would watch credit spreads for that. If people think that the corporate grade, basically junk bonds, will be better than the government backed, that becomes an issue if the spread widens. So we'll watch out for that. But for now, the big drop in them yesterday sort of would signal, things are okay. Not the end of the world right now. Kahio with the 20 in the chat. Mahalo. Thanks for all the wisdom. What's up to Siege, TK, Astro, Bunny, John, Singleprint, Stu, and everybody else in the futures pit. Love to see it. All right, I think we have to go through the transition again, unfortunately. Once is cool, twice, it's getting a little overplayed, but I don't know how to undo it, so it only happens once. So we're going to flip back over to the technical charts. Bear with me as we change screens here. Enjoy it one more time. Grab a sip of coffee. Let's get the job done. All right, we're back on over. Oh my God, the market's dumping. Who said it in the chat? Let's see. Where is it? I'm sure someone said it in the chat. Whoever said that the market was crashing or breaking back down aggressively or dumping. Come on. It's just a pullback here. It unwound the positive little impression from the CPI report, but we have a job to do. Let's go back to the 4-hour time frame chart. For anybody who's just tuning into the stream, we just got way better than expected inflation numbers, and the labor report also came in fine. No big miss on the jobs report, all right? So with that, the main technical picture that we're dealing with here is so long as this double bottom can hold as being secure and we are producing a higher low over the neckline at 5,300, I'd be very open-minded to an hourly higher low producing the trend reversal. Right? I know we're on a 4-hour time frame chart, but generally this can still act as a daily lower high. Let's be honest with ourselves, right? This to this can still act as a lower high on the daily time frame chart, but it's all eyes on the higher low. If the market's going to pull out of this rut to the downside. So watching 5,300 very closely, very, very closely, right? Let's go ahead and take a look at the hourly chart, see what's happening from this point of view. And again, this is not a rocket scientist level. We have Friday's highs, Monday's highs, Tuesday's highs. That's the area at 5,300 that we want to see act as support. It's the neckline of the double bottom here. From a technical point of view, it's a great spot for a higher low. Would concerns increase if we came underneath 5,300? I think the answer is yes, because this is such a thin structure retracement. There was very little volume committed at each one of these individual prices in here that make me a little skeptical of this void. So if we were to come underneath 5,300, a lower high brigade bolt through that zone, it starts to suggest something that's not really compelling for the bottom being put in place, which is a look above and fail, right? Look above, fail back into the range. Now all of a sudden raises the question, why were buyers unable to capitalize on this euphoric, monumental rally in the upward direction, right? Why were they unable to build a structural higher low if, in theory, the worst is behind us, right? So 5,300 becomes top of mind. Now, one of the concessions to make here is that China is not fully resolved, right? Yeah, we've got the 90-day pause on other things, but China tariffs in terms of the imposed tariffs we've placed, have just bumped up actually to 125%. And it's probably pretty likely that there's going to be some sort of retaliatory measure at some point. And that's the big question mark. That's what hangs in the shadows of this entire dynamic here. So I'd like to, from a technical perspective, see 5,300 offer some response for the market. However, if there's some retaliatory tariff from China, if there's some commentary on that and things don't resolve fruitfully there, then I wouldn't be afraid of saying like, okay, back underneath 5,300, let's just put our caution hats on a little bit here. I think one of the ways that the market screws a little bit of everybody, right? Everybody gets a little bit screwed, is when and if the market undercuts 5,300, sucks in the bears one more time, and then brigade bolts back over 5,300. So one of the things I want you to take away from this, is understand that these are single prints, right? Shaded in blue here are single prints. And if you're not familiar with single prints, I'll just bring this down to a 30-minute time frame chart. It's a market profile reference where there's no overlapping bars in between this area. This is not an ICT concept. This is not a fair value gap. This is not the same thing. This is single prints based on market profile volume commitment at the individual levels. So please don't get it twisted, okay? If we come down in between this zone, in theory, what should happen is that we should fill the single prints all the way. So if that's what should happen, right, and I'll always give credit where credit is due, who came up with the saying? It's Peter over at Shadow Trader, right? When what should happen doesn't is a huge signal in the market. Hashtag WWSHD, when what should happen doesn't. If the market looks into these single prints and then pops out of them without closing them all the way, that is a huge piece of information. That tells you everything that you need to know. What does it tell you, you might ask? What do you mean that tells you everything you need to know? Well, number one, stronger sellers just not present, because they should move through this thin structure with no issues whatsoever. There's no volume commitment at price. Basically treat it like a gap, right? Number two is if there's a brigade bolt back over 5,300, what just happened? Well, anybody who got suckered in on the short side is now fuel for the rally back to the upside. Those shorts squeeze out. Where are they probably stopping? They're probably stopping over 5,300. So that adds fuel to the fire back up to the equal high, if not some sort of gap attempt on the upside from the Thursday session, Wednesday into Thursday session of last week, right? So that's that. The ICT, the I can't trade indicator. We'll let them be. I mean, if I know it works for some people, and if, in the market, it's all about, there's a million ways to skin the cat, right? That's the classic saying. So whatever works for you, you do whatever works for you. If it works, great. Anyhow, that's my take here on the single prints. Please understand that this is going to tell us something about the market one way or another. If we look into it and it fails, oh boy, I would think that's it. Done. Game over. Capitulation low is in. If we hold up over 5,300 and we just don't even get in there in the first place, another indication that that's it. If we set the lower high and rotate all the way through, yikes, ugly. And even if this is going to happen like this, at this stage of the game, you have to keep an open mind to closing them all the way. You have to take this at face value on the first go around, right? That is that. Okay. So hourly chart complete. 30-minute chart, we've done a little bit of talking just to illustrate where the single prints are coming from. It's this upper wick and it's this lower wick that sort of segment out the single prints. This is H period from a market profile point of view. Let's take a look at the 15-minute time frame chart. Let's get a bit granular here, and let's ask ourselves the 3.5 questions for today's session. All right, let's make sure we can see a couple of reference points up and down. Let's do something that looks like that just so we can see the gap close overhead. All right, here we go. What a wild-looking chart. I never thought I would ever be looking at a chart that was up just astronomical amounts over the span of a couple of hours. Full year gains over the span of just a few short hours. It's crazy. But this is the nature of the beast. This is the nature of the beast. We trade the chart in front of us. Scott said it perfectly over on X last night, and that's our job, so let's stick to it. Number one, where are we opening relative to the previous day's range? Here's the high, here is the low. We are certainly opening inside of the previous day's range, which is a neutral indication. Finally, this market's not opening on a gap up, a gap down, anything crazy like that. We have a neutral open inside the prior day's range, which always means that we get to ask question number 1.5. Where are we opening relative to the previous day's value area? crazy. Value actually shifted higher with price based on this volume commitment here being produced towards the highs. So value area high is way up here, actually. Value area low is down here, sort of in an ironic way, the origin of the rally as well as the top end of the morning consolidation, which was just what a the tick yesterday morning. God, give me heart palpitations. Big negative 1,000 print, big positive 1,000 print, big negative 1,000 print, big positive 1,000 print, back and forth and back and forth and back and forth, ping pong, just silly. So anyhow, now that this is resolved higher, it's interesting to me that the value area low is right at the top of the range. I like that. It's going to help us if ultimately the single prints close, which I'm not forecasting. But anyways, back to question number 1.5, this would be another neutral indication. Technically speaking, we're opening in value. You could also say that obviously with the single prints in the cyan shaded area there, this is just a double distribution, right? You have upper and lower distribution. You could call this D1. You could call this D2. And of course, we are scheduled to open inside of distribution 1, which is a more bullish indication. And you could even parse this out. You treat them as separate days, right? You could parse this out and say that value is really here out of this distribution. And we're even opening inside of that value if I just extend this off to the left, right? And that's just based on a quick eyeball on the actual range, right? Where there's the most overlap. It would definitely be the TPO value area there. I'm not sure about volume. I'm almost confident that the point of control is there. Let me take a look on another screen, actually. I do have it pulled up. Let me just double check our print. So point of control, ES, point of control was at, let's see what the number is here, 5,400 flat. 5,400 flat was point of control. So that is, yeah, spot on. This is the point of control, which means that the value absolutely would be right about in here. Point being, all of that, suffice to say, is 1 and 1.5 tell us that we want to be a little patient here off the open. I think the other thing that is absolutely top of mind, how many people do we have in the chat here this morning right now? 7,200 of you. All right, first of all, if you're new here, we're live every morning, 8 o'clock Eastern time. Come on out to the show again. Let's keep these numbers up. But what I would want everybody to understand is yesterday is going to ignite a lot of HBS. HBS. HBS is a term that describes, the B is interchangeable, could be bull or bear. In this morning's case, we're going to say bull. HBS stands for extremely excited. Use your imagination on the H word, right? This is a family-friendly show. We're going to keep it that way up until about 9 o'clock. Extremely excited bull syndrome, all right? Everybody saw this move yesterday. Oh my God, the market's up 11%. We got to chase it higher. We got to buy this thing. Buy him, buy him, buy him, buy him. It's got to be buy, 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 buy. Kramer's going to find the buy button and he's going to press that thing all day, right? Hyped could be a way to interchange for the H. HBS, really excited, super excited. Not halfback support. Yeah, those bulls, they're pretty prickly, thorny, spiky. Rhinoceros has one of those. It's really excited bull syndrome. So don't fall victim to that. Do not look at this chart and say, oh my God, like the market was up 11% again. It's got to be up another 20% today. We're going back to all-time highs. Oh my God, buy this thing as soon as the market opens up. Like, chill out a little bit. Do not fall victim to the emotion that gets thrown around in the market. The whole reason we go through the 1, 2, 3 questions every single morning is so that we can level set and just understand what the probabilities are looking like, right? So point 1 tells us that we're neutral. Point number 1.5, even with distributing into the upper distribution from yesterday, still tells us that we're sort of neutral here. We're not really expecting like this huge response as we open near the point of control, basically. Question number 2 tells us, what do we see relative to the overnight range? Well, here's the overnight low. It looks like we're testing that right now. Here's the overnight high. It's one and the same. It's the Jim Robitaille trio up here towards the highs. I know Jim always likes it a bit more when we get to talk about the trio at the highs rather than the lows. Nobody wants to be associated with the lows. So we got the trio up there, and we're backing away from that. So question number 2 tells us, okay, there's some pullback taking place. Is that reasonable in the face of what we've got relative to the big rally yesterday? I think the answer is yes. So to me, it's, yeah, maybe a little bit of a down arrow here for question number 2, but not really not to the point of, oh my God, it's a short either. It's not like, holy crap, we're in the single prints for the open, and it's rally, retest, reject, and look for the short like that. That's not the case. So 1.52 really start to lean a little bit more on the neutral side of things. If anything, there might be a little bit of risk reward here around this 53.65, 53.75 level, and then some sort of rotation back up to the highs. That's a possibility where you could easily pick off risk reward. And as long as we're trading in alignment with sort of risk reward principles, that gets us a little bit closer to remaining rational in this market, right? So that's an idea. Another idea that comes to mind, and this is not even, we haven't even asked question number 3 yet, is if the market falls a bit, that's also fine. This easily becomes an idea for upside, right? So we're getting a little bit premature to the pathing, and that's those are 2 ideas that start to strike me as being somewhat reasonable. And remember that patience is going to help us determine whether or not we should actually execute on those ideas. So P for patience, Web's profile picture is the absolute pinnacle of what we should be thinking about when the bell goes ding, ding, ding at 9:30 here in about, 40 minutes to go until the market's officially open. All right, number 3, let's continue along. Question number 3, what do we see relative to the previous day's settlement? This is the same thing as saying the previous day's closing print. How much time was spent above? How much time was spent below? You can clearly see in the initial stages some decent time spent above, but promptly fading off. And once again, is this reasonable becomes the question that you have to ask and answer. Is it reasonable that after an 11% up day, the market fades a little bit through the pre-market? Of course.
Order
Of course
filled.
That's reasonable. That's not. That's well within the realm of capabilities. Like the other thing too is, forget about the percentage gain. Forget that this is an 11% up day. Let's just speculate, or what is it? Let's just pretend. Let's just hypothesize and ignore the percent. Let's just say that this is a 3% up day, right? Forget about the magnitude of the move, but if this is just a 3% up day, this would still look like a very reasonable pre-market pullback. Yeah, the market's technically down 3% through the pre-market or down 2.5% or whatever, but relative to the move, everything's relative, right? It's fine. So let's take a look at the distribution here of question number 3. Let's actually answer the question. I would say that the overnight inventory is probably skewed a little bit net short. There's more time that's spent underneath the previous day's settlement. Probably something to the magnitude of, I don't know, what do you guys like, 70%? Let's try 70%.
Order filled.
70%, we'll say NS for net short. And that means that inventory correction is possibly in the upward direction. Okay? So that is what we've got out of those 3 questions, primarily telling us that we want to avoid HBS, the bull syndrome. We want to exercise P for patience off of the open. We are interested in 5,300 acting as a critical area of potential support. If it fails, we have to remain open-minded for a 200-point rotation back down to 5,100 on a thin structure retracement from the single prints, and we'll take it in stride from there. Okay, so I'm going to let this simmer for the exact time it takes to take a sip of coffee. The barista made a beautiful latte for me this morning. I don't know about you guys, but it's looking good. Like I said, I've got her covered. I've certainly, we handle all the payments up here, but if you're feeling generous, tip your barista. Tip your barista. All right. Sip of coffee. What's her name? What should her name be? What should the name of her be up here in the penthouse? We have to personify her. Anyhow. You got barista money? No Skill says, calls it open. Got it. Karen. It can't be Karen. Karen's a great name, but I honestly, it's a great name. I feel so much so for the people who are named Karen, who the internet have just branded as like these people who are awful, right? Because I think it's a great name, but unfortunately the internet has just destroyed it. I was thinking something like Jennifer. Jennifer. I always heard back in the day, if I was of the opposite gender when I was entered into this world, my name might have been Jennifer. Crazy. From Jennifer to Matt. All right, let's clear this up. Let's get into the pathing. Naomi, that's an exotic one. I like that. I like that quite a bit. All right. The chat's going crazy with a bunch of names out there. All right. Let's keep it going here. Let's jump into our pathing and the ideas for this morning's open. So as we know, obviously the market tone has shifted dramatically to being bullish. If we were to get some sort of pullback, right? Any pullback that goes to 5,300, that is my first watch. Okay? So to get there, if you want to be quick draw McGraw, I mean, we're talking about an 80-point range. There's 80 points in between this area, right? Underneath our overnight low, roughly, even call it 40 points, from 60 to 5,300 flat. 60 points, whatever. You could try to be cute with it, quick draw McGraw, and get there. I would prefer to be patient on that and then watch and gauge the response at 5,300, right? So a morning pullback that breaks the overnight low is fine. That's not the end of the world. I'm looking for buyers to step up at 5,300. Now, let's be clear here, and I really want to use structure. And I'm going to say, if the pullback looks like this, and then when we get to 5,300, we see this, this is not a buy. This is not a buy at 5,300, right? Let's be very clear about that. It's not a buy at 5,300 if the candle structure on the 5-minute chart looks like that. If the candle structure on the 2, 5, 15-minute time frame chart starts to look something like this, we're slowing down here and we got a hammer, or let's just say it's a doji, and it could be a red doji, it doesn't really matter. But if we start to see signs of like some slowdown and we can at least manage risk up against 53,
order filled,
then the premise of this trade, and then we'll get back to the pathing and just the normal lines we draw, then the idea would be, how can I get involved on risk, stop underneath the set of lows or whatever, reward back up towards the previous day's high. You could structure this to sort of, if this is not drawn to scale, obviously, but depending on your entry, 2 5-minute chart, whatever, maybe you just retarget 5,400 and you could say risk reward if it's tight enough to do so. So this becomes interesting at 5,300. If it's just solid red-bodied bars going straight through, if this candle actually looks like this, there's no buy there, right? You need to have a valid candle setup at 5,300. I want to be very clear about that, considering that this is going to turn into a cliff. This is going to turn
order
into
filled,
an absolute cliff. Let's use a cyan crayon here for that. It will align nicely. And let's just label this 5,300. And let's continue along with the simplified line pathing here this morning. Okay, so now that we've been through that exercise in terms of looking for candle structure, a pullback that gets there might end up looking something like this is fine. We're looking for risk reward here, and then something that's over the opening print, previous day's high becomes the target. All right, this is sort of the ideal outcome for today's session. If you had to say, if you could only trade one thing today, Matt, what would it be? This would be where I would sort of focus my energy. If the market produces something that pulls back 5,300, sets a higher low than over the opening print after holding 5,300, I'd be looking for prior day's highs. Now, remember also that yesterday was a big catalyst day. You're still talking about a 200-point range between 5,300 previous day's highs up here, the trio, up at 5,500, right? So it's still a 200
order filled,
and I think
order filled
of that. And the idea that if there's no new catalyst for today's session, if there's nothing new, then just manage expectations on that upswing. So let's drop an ME up here. So for anybody new to the stream, it's all about me today.
Order filled.
Me. And me, of course, as those who have been here know, stands for managing expectations, right? It's not literally about me. It's about you and you managing your expectations, all right? So that's what we have on the upswing. 5,300, 5,500, managed expectations to get there. Ideally, it's a hold and then a higher low over the opening print to execute on these ideas. Let's drop a little green dot in right here. Let's drop a little green dot in right here. This is the picture-perfect pathing. That would be throw it in a textbook. Doesn't get any better. This is the neckline, as we know, of the double bottom neckline, DBNL. Not the database neckline, but the double bottom neckline. MongoDB. I always found that way more pleasant to work with, MongoDB versus SQL.
Order filled. Anyways,
let's not talk about too much of that. We'll get to the spider's cash in just a moment. Don't you worry. We're always a little bit over time whenever it comes to the CPI days. So anyhow, SQL is king though. I don't know. It might be the best, but MongoDB always was. I found it to be a bit easier. What's the name of the stack? What's the tech stack that uses Mongo? I don't want to waste too much time thinking about it, but someone will tell us in the chat. Mongo sponsor confirmed. Not quite. Yeah, it's for web apps. For web apps. MERN, the MERN stack. The MERN and the mean stack. That's right. MERN apps. I made a couple of MERN apps in my day. Anyhow, 5,500 on the upswing. Nowadays with AI, you just tell the AI thing to do it, and you're like, okay, all done.
Order
all done.
filled.
Okay, 5,500, 5,300 on the downside. Some other alternate pathing ideas to get involved in here. If the market just rallies straight out of the gates, the unfortunate part about that is that we're technically inside of value, inside the prior day's range, and you don't really have a reference point inside of this area. So although the market very well could rally out of the opening gates, like, it could easily do something that looks like this, it becomes a little bit difficult to actually spot where the entry is here.
Order filled.
A no-brainer pullback over an upward sloping VWAP. We'll use cyan for that as well, something that looks like this. If you can manage risk against the VWAP and if you could target the previous day's high, maybe it's worth trying to attempt, but just understand that you're playing with fire up there. That's a little bit of playing with fire towards the highs without a clean reference point. The VWAP is always, it's like I would prefer to be trading up against a structural level, not just the VWAP. So that's an idea. It's on the table, but it's not. I'm not highly confident in that. I would much prefer these green dots that we've already drawn in, because at this point you're referencing 5,300. You're referencing the opening print on this particular pullback right here, right? Very clean for risk reward. Some alternates that we started to suggest in the 3 questions / the single print conversation we were having. If the market looks into the singles, and then I'm just going to draw this extended so the pathing doesn't overlap too much, but it could easily
Order
happen
filled.
early in the session. I'm not saying, these drawings are never accurately drawn on the time scale. They're accurate on
Order
the price
filled.
scale, pathing scale, but the time, not accurate. All right, so understand that, I'm not literally looking for a 2 o'clock recapture of 5,300. Could it happen that way? Sure, but generally the idea is that we would breach into the single prints. Any high or low back over 5,300
Order filled.
Just absolute rocket fuel to the upside. Once again, the logic behind this trade here is that you have trapped shorts. You have trapped shorts from this to this, right?
Order filled.
Now, of course, the base case, if we move underneath 5,300, the first assumption we should make is that a lower high underneath it probably extends, or we should be thinking about, a 5,100 retracement single print closure, right? So that's sort of base case, and the reason being, right, is because of this. And if you look at me and you're like, I don't really like that idea, that's fine. But I would say I would not, the premise, the understanding, right, the context clue that you need here is if the market looks into the single prints and you're
Order
not
filled.
shorting this back down into the
Order filled.
close, if you're a believer that this is going to play out over time here, that's fine. But I wouldn't start just blindly buying the market as it's pulling back into the single prints. I would definitely wait for that confirmation high or low back above the 5,300 neckline of the double bottom, back out of the singles, right? So let's please understand that. If you're thinking that it's got to be a long, but you're open-minded to a look below and fail on 5,300, then just I don't think it's a wise decision to be buying this in here where there's quite literally a vacuum of nothing, right? In theory, prices should have no issue coming all the way down and closing the singles back down towards 5,100, right? So there's that on the downside. Robert K says, why is there no reaction to the CPI data? Well, because this was the reaction. Yesterday, it just, right, and we talk about this, right? Yesterday's pre-market live stream, we talked about the word zeitgeist, right, which is the current market obsession. So, like, what's in the mind's eye of the market right now? What's the theme of the market? The market theme is not about inflation right now. The market theme is about Trump and tariffs. So, yeah, the inflation data was good. All that means is that we're not going lower, right? That's kind of all it means. So anyhow, so yesterday was a reflection for all of the positive and anything but very, very good news now.
Order filled.
The statement here in the chat from Mostly Peaceful Riots. It's an interesting username. Yesterday was all the reaction for the positive. We moved down on anything but very, very good news now. I would agree. That's generally speaking, I think, a reasonable approach here, noting that the cat's out of the bag. Don't make me draw it. I think we'll draw it. You're going to make me draw it. Okay. Here's the FU scale. For anybody who did not tune in yesterday, for anybody who did not watch
Order filled.
prep for Wednesday. For anybody who did not watch the midweek market update for Wednesday, we'll draw in the FU scale. If you're new to the stream, first of all, welcome. I see that we still have about 6,800 people up here in the office, so I'm sure some of you are still new. So it's a pleasure to have you up here, but this is the FU scale. It's not literally FU, but we have maximum fear, maybe little m, big F, maximum fear. We have complacency in the middle, and then we have little e, big U for euphoria over here. So you get FU. Great, let's laugh. Trump tariff announcement 1.0 is max fear. Or it's not 1.0 because he was hinting at it all through the end of January, February. But when he announced on Wednesday of last week, oh my God, 34% reciprocal tariffs on all these countries, that was max fear. That's why the market did what it did, of course. What he just announced, the 90-day pause, is almost all the way here to the midpoint complacency, if not slightly above, at euphoria. Right? This is a euphoric push to the upside, undoubtedly. So anything now that is not like the best, most positive news you've ever heard, China tariffs going down to 0, a trade deal has been reached, free trade is now global. If that's the headline, great, we probably have a euphoric market. If it's like, China's not really going to budge, but things aren't really getting worse, and we just sort of hang out in this zone on the FU scale, you're probably not going to see like another day that looks like yesterday, right? So understand, and we even hinted at this with earnings a little bit with JP Morgan and hearing from Mr. Demon here and forward guidance. It's an expectation game. It's an expectation game, right? This is all about expectations of the market. It's not about what you think should happen. It's not about what you think, I got my degree in economics and this, that, the other thing. I mean, maybe when you're plugging it into a model in a vacuum outside of the human emotion of the market, but when it comes to actually trading, number one always is the analysis, the key levels. So let's say KL here for key levels. And then number two is the expectation game, e.g. expectation game. All right. So that is what we have here out of this morning session. Those are the levels. Those are the two numbers that I care most about. And you could throw in the overnight low and the opening print. The opening print is always a key level every single day. Doesn't matter where we're opening, but it's always a key level. Yeah, I think that this is analogous to the wall of worry as well from Anonymous in the chat. Yes. Yep. Yes. M. Rosa, it is technically pronounced Jamie Dimon, but we up here joke around and call him Jamie Demon. He ultimately resides and occupies floor 75 underneath the penthouse office, which you all are hanging out in with me. So we do a little ding-dong. Maybe we'll bring it back. We'll do a little ding-dong ditch on floor 75 this morning as we wind down the morning show. We're not there yet. Don't go anywhere. We're going to keep going here.
Order filled.
There's cash, the NQ, the Russell, quickly rip through the core list of companies. We've put this on, and we're all set. We know the pathing. We know the ideas. I'm going to take a swig of coffee, and then we're going to keep this thing moving along, all right? Let's take a look. Floor 666. Oh, my God. That'd be like basement floor, negative 666. Nobody can be higher than the penthouse. Come on. Floor 76 is maxed out. All right, there's the sip of coffee. Let's clear it up. Ready? 3, 2, 1. Poof. It's gone. Let's jump on over to the Spiders Cash ETF. Let's see what's going on from this point of view. Last night, I was almost brought to tears with the amount of times I had to say 523.75. 523.75. Oh, my God. It's right there. 523.75. If we could stay over 523.75 on any pullbacks, once again, it's very clear that this double bottom neckline is holding up, and we are all set. If we're thinking about the single prints and the equivalent of the single prints over here on the Spiders Cash, we could do the same thing. We could just bring this down to a 30-minute time frame chart. That'll suffice for now. Ignore this lower wick. That's a bit of a wonky print, to say the least. But your single prints are right here. Right? Single prints are right in here. So underneath 523.75 comes down into about, what's the number? The top end of yesterday's consolidation range. If you want a helper level, we can throw it in. I'm always a little bit skeptical of getting overly level happy. You guys know that, who've been here for a little while. It's 500 flat. 500 flat. Let's do that. Let's go 500 flat. Let's drop this back to a dim gray level, and let's get the job done here this morning. Yeah, it depends on your chart. Depends on the time frame you're using. Depends on the data provider you're using. This is probably a phantom print for some unknown reason. Regardless, 500 is that line in the sand, the single print closure, which probably means in a weird world we should do, it might actually be more appropriate to do something that looks like this, and leave it like that. So you've got some helper levels in here, but I wouldn't mortgage the house on 511.50 anymore. So 523.75 is your key hold on a pullback. Once again, opening print somewhere in here. If we pull back, maybe if you want to try to take the short to get there, be my guest. When and if we get here, it's all about spotting whether or not the market wants to produce a higher low over the neckline of the double bottom. If that's the case, it would start to confirm that the capitulation low is in, and we are looking for a more constructive move out of the market back in the upward direction. If we fail 523.75, the same concepts apply that we just talked about in the ES futures, right? We open here, we look below and fail, rocket fuel to the upside. Big upside move if sellers get trapped and we confirm a higher low back over the neckline of the double bottom, not revisiting this low, reinforces the fact that sellers failed on the gap down. This was capitulation on the Monday morning open, which makes the most sense if you think about the sequence and the timeline, right? Everybody panics into the end of last week. Oh my God, the market's gapping down. We're down over 15% from the all-time high. We're going to gap down on Monday. Mom and pops call up their brokers, say, get me out of this, liquidate my 401k. Little pop, and that's it. When everybody sells, that's the bottom. Remember that market, from an auction theory perspective, markets bottom when the last seller sells. The LSS, the last seller sells. LSD, limited slip differential. Anybody? No? No need for some off-roading references here with 9:13 on the clock. We'll talk about building trucks, building Jeeps at another time. The conversation here spans the full gamut. Let me tell you. So 523.75, it's your top watch. The timeline makes sense for this acting as a capitulation low. If this holds up, then there is no reason to believe that we are, oh my goodness, market crash again, new lows, right? So that's that. Let's jump on over to NQ futures. Let's see what's happening with the nasty Nasdaq 4-hour time frame chart. Obviously, we know it's going to be a very similar analysis from the top-down perspective, 4-hour. Here's your double bottom. We know there's a neckline here. As long as we're over it, we are maintaining the bullish stance. We do have single prints in here. Let's see those on the 30-minute time frame chart. We'll go hourly, but then bump down to a 30. Here it is. Let's take a look. And there we have it. You can see there's the single prints out of the NQ. If we get a pullback that goes through that level, the number, 18,250 for round number's sake, all right? 18,250. Sear that into your brain for today's session. If we're over 18,250 on the NQ futures, no reason to panic. Capitulation lows are holding. If we're under 18,250, it's all about whether or not this is a partial single print close or a full single print close. Just like the ES futures, the risk is if we're underneath 18,250, it technically starts to become a little bit of a look above and fail. And as long as this holds as a lower high moving forward, that's your danger for, oh my goodness, bottom end of the range is the target, and it's not over yet. It's not over yet. All right, so first thought, base case. Base case. I made a point of saying that we're going to try to use this more so moving forward because I think it helps clarify. The base case analysis here walking forward is that this is a double bottom. Yesterday broke out over the neckline, and it would not be unreasonable for a retest of the neckline. When we get here, we will be eyes on looking for a hammer on the hourly chart. We will be looking for 5 and 15-minute inverted head and shoulders, double bottom, any signs that buyers are stepping up around 18,250. That's what we're looking for as the base case. If that does not happen, if we just see straight up red bars that start looking like this, then what we do is we morph the base case into saying we'll first look for a lower high and then the rotation to the downside. It has to be. You're getting a look above and fail on the balance range. If that base case also breaks, and I know there's a lot of failures to keep track of in here, but it's
order
all about
filled.
Changing the response off of 18,250. If we move like this, that's the rocket fuel for the upside, looking to close the gap overhead. This gap actually, honestly, can just get removed off the chart. Look at that. We're clean. We're getting clean. Let's go to the hourly, and let me actually make sure that there's not a intermediate level we should care about. There is, which would be those highs. So this is always good just to double check some of the reference points. Let's bring this in here, and let's just bring that out. I'll manually bump that to the end of the month, April 30th. Thank you very much. Come again. Great. All right. Even on the hourly chart, I mean, you can see the structure is clear as day. Here's the double bottom, extended hours.
Order filled.
Test of the neckline. That's where you're looking for the higher low, right? You could imagine how you have lows, higher lows. This would be the next ideal higher low in the trend count, right? Let's go back to a 15-minute time frame chart. Let's turn the extended hours back on. Let's take a look as to whether or not we're opening in range. Of course we are, very similar to what we had over in the ES futures, 9:16 on the clock. I'm keeping an eye. If we're thinking about the framework, we're opening in range. We're opening technically in value, but just by a hair. Value did not skew higher out of the Nasdaq. So in range, technically in value, almost above value. I would really be using the 19,000 flat level. If we're over that, that starts to become a little bit more like euphoric consolidation, maybe looking for follow through. In terms of the overnight range, here's the low, here's the high. We're opening closer to the lower third, which is okay, a little bit more neutral to bearish. Overnight inventory, just like the S&P 500, probably skewing a little bit more net short. Let's go 80% on that. So what does it mean in terms of the pathing? Well, in here, I would just sort of keep an open mind to anything goes, right? That is going to be over 18,625, but under 19,000 flat. This is consolidation. This is where I would put my patient hat on, and I would look for travel trades that exit this to do something in the market. Now, Quick Draw McGraw can probably look for the short
Order
scalp,
filled.
the overnight low into the big bad level we just described at 18,250. But when we get to 18,250, once again, if this is the range and we do this, Quick Draw McGraw can get there. But I would think that the better opportunity is looking for the long off of this, and then some sort of brigade bolt over 19,000 flat gets you to your previous day's high. That's the euphoric follow through to the upside. Consolidation that breaks out of the range here, you could target that, but please make sure there's a no-brainer stop associated with this. You're sort of getting involved. Remember, just like we don't want to be short in a hole at the very bottom end of a move and you're looking for a failure pattern, you're actually doing the same thing after a huge move to the upside. Again, up 12% on yesterday's session for the NQ. So it would have to be a no-brainer stop loss in here if we're going to retarget previous day's high and then look for potential follow-through beyond that. Otherwise, the risk just doesn't make sense. Any sort of pullback to get down to here, and now all of a sudden, where do you put your stop, right? So make sure there's a clean stop if you are going to get involved near the highs on the long side. If the market falls underneath 18,250, again, base case has to flip and say that we should be thinking about a single print retracement down here towards what's the number? We have 17.6. 17.6 would be the downside figure for your single print retracement. All right, that is what we've got out of the NQ. That is what we have out of this analysis. 9:19 on the clock here. Let's see if we can't get the job done and jump over the QQQ Cash ETF real quick, see what's happening from this perspective. Rinse and repeat, but your numbers are slightly different. What do we have? I would start thinking about... I would actually bring this level back up. Let's remove that guy. Well, no, let's keep this guy. Sorry. Let's remove, undo. Then let's add this one in, right around in here, because that's that consolidation zone that we were just referencing over on the NQ futures, right? So anything that just sort of consolidates in this little zone right here, it's rinse and repeat of the exact strategies we just talked about on the NQ futures. Consolidation, brigade bolt underneath brings you the pullback into the neckline here of the double bottom. 441 is the number. This is underneath 453. If we're over 457.50, looking for upside into 465.85 on the upswing there, previous day's high, right? Understand that this is where you need that no-brainer risk-reward entry, okay? That's what we've got. If we fall into the single prints, it's underneath 441. The single print's technically closed to the August 5th low. That's your high of the morning consolidation from yesterday. That's at 424.75. 424.75. All right. Let's move along. Quick check of the Russell. What do we see out of the Rusty Rut? They're already... Actually, the Russell didn't even. Let's say that. Let's start with the Russell didn't even make the break up and out of the range. It more so just made the move to the equal high at the top of the range. So you had highs, highs, highs. This was a lower high on the Tuesday session. So we are pulling back, and we are getting a little bit of a response here over the single prints around 1850. I would watch that for small caps. Small caps might hold the key here. Right, that's the classic saying. Go on X, search up small caps, hold the key. You could draw the little cap emoji. Oh man, God, I love the drawings, but I just know it's eating up some critical time here. This is like a baseball hat, maybe a baseball hat, and then small caps. I guess it would be the small emoji. I can't resist. I've got to resist. We don't have the time. It's 9:21. If we're over this 1850 mark, then I suppose that keeps things neutral and afloat. If we're under and closing the singles, I would certainly be thinking about, at minimum, pulling back to test the necklines over in your S&P and your Nasdaq. All right, so watching your Russell as being the item, the index that holds the key. That holds the key. Spam on a Stick says that was definitely a igloo, perhaps. Rebecca F., have a green trading session. Thanks for coming out to the show as always. We did not go over Tesla yet. We're working our way through the core list of companies in just a moment. Here is the IWM Cash ETF. 182.50 is your big bad level, right? This is the equivalent of that 1850 that we just talked about over on the Rusty Russell futures. If we can hold up over it, again, this is maybe your saving grace that says, okay, we're just kind of neutral up here, thinking about patience and looking for upside. If we fall underneath the 1850, that is your danger zone, and you're at least looking for neckline retests out of the two other indices in there because of the divergence that the Russell is suggesting. Okay, that is at 182.50. All right, let's jump on into the core list of companies here. This is going to be rinse and repeat. So all the concepts we've talked about so far for the broad market will apply to the core list. We are looking for pullbacks from the highest high in the reversal out of the hourly double bottoms for retests of the neckline. So we're just going to go over numbers to make sure we can get the job done. Pullbacks that stay underneath 114, you're looking at 110.85, 107.15, then 104.75. I would start entertaining long ideas. I would be looking for buyers in this zone down here. 107.15, 104.75. Those are the two numbers that I would be mostly focused on. If you want to look for a look above and fail over 114 with a lower high underneath, that could kick off the risk reward to the downside along these lines right here. All right, that's that. Let's move along to Microsoft. Softy, of course, really impressed actually with some of the things happening on Softy from a daily perspective. I mean, there's still it would have been best for the sellers to reject here at 377.25. That clearly did not happen. So any pullbacks on the daily that offer a higher low over 377.25, except prices back inside of this upper range, that's pretty bullish. That is pretty bullish. All right, so watching very closely 377.25 as the key level. That's where I would want to see prices hold as the do or die. But you can see here as well, 385.50 can offer a higher low over the dividing line of that previous range. Let's go back to the hourly. Let's take a look, and let's see what we can't see. There it is. There's your dividing factor back over there. Okay, so 392, look above and fail on that. Anything under 385.50 gets you to your 377.25. That's your top watch for longs. If the buyers can hold up there, rock and roll. If they can't, then obviously the weekly cliff at M365 is back in play. At FIL, 9:23 on the clock. We're getting it done. This is just a balance range. If there's any bearish headlines that strike today, Apple is the place I'm looking to short. Apple is the most relatively weak name that we have out there in the market. You can see the highs up here did not close the gap. You can see that this is not really a clean double bottom. This was a lower low double bottom versus the higher low double bottom that we had at the index level. So yeah, I mean, you can see we're opening here 189.25. If the market is going to rally, I would need the broad market to be strong if this is even going to be an entertainable idea for this long risk reward here. It's an idea. It's something that you can think about. You can think about this higher low on the pullback this morning, but I would just I would look for a stronger name, honestly. Speaking of, let's take a look at Nancy. If Nancy pulls back, which it is in the pre-market, notice that we're just over 184, great brigade bolt, right? The premise of all these trades is that you're brigade bolting over the neckline of a double bottom. Here's your double bottom. This is actually more like a mosquito pattern, as we know. And over the neckline, brigade bolt, higher low 184, changes the structural trend in the upward direction. 184, all right, 192.25, very clean area of resistance based on this overhead supply. Google, we've got 9:25 on the clock. Let's do it. You can see the double bottom. You can see the higher low. You can see the neckline. Looks like 157 might act as a little bit of a contender first. I would like to see, and this might actually be a more tradable short if the broad market is weak out of the gates. If we do go for that pullback, I would watch Google. If it can pop over 157 and then set a lower high underneath, this short-term brigade bolt accomplishes the entry to get to the longer-term brigade bolt, which is here, right? So it's the same thing. We're still using 150-175, but because we have this push over the level, if this fails, now we actually have an actionable short to the downside, right? You have trapped buyers who might close out underneath that 157. Okay, still thinking about longs when and if the pullback takes place, but the pullback is more tradable out of something like Goog. Let's take a look at the metaverse. This is, it's actually in the zone, so I would say a similar comment over here, where 574 can act as your helper level, primarily coming from the historic double bottom back here. Historic just meaning older. Not that it was monumental, but just historic. So any consolidation in this zone, I would say this brigade bolt can go thin structure retracement under 574, targeting 550.50. If that doesn't float your fancy, if you're like, no, I don't want to short the market, then this long is what you would look for on the swing. Any acceptance over 586, and we might have that lockout rally in the upward direction. Becomes a little difficult to nail an entry on the highs there. Let's move along to Tesla. And let's talk about this got a double downgrade, I think the price was it this morning. Regardless, it's still holding up over the 250.50. I would need to see that act as support here this morning. I do like the fact that it's pulling back. I would like to see the double bottom neckline retest. I would like another re-entry opportunity here for risk reward back up towards the top end of the range. Show me the money. Show me the money. If we could pull off something that looks like this generally as a range to exploit, very interested. So show me 250.50 and we'll entertain longs off of that. If we're just sort of noodling around in here, if there's a higher low that forms that's arbitrary away from 250.50, I would treat this as bull flag on the hourly, trying to seek 286.85 on the upside over time. With about 3 minutes to go until the bell, we're almost there. JP Morgan earnings tomorrow morning means that this is not an options candidate for today's session. Your IV is going to be through the roof on top of what's already happening with all of this madness. Probably staying away. Any consolidation up here, though, is constructive. It is constructive for a higher low over, I wouldn't call this a double bottom neckline, but of course, highs, higher highs, higher highs. If you could stay over the last high in the sequence, right, Brigade Bolt, great. Looking for the gap to close. We'll see what the reaction is from earnings tomorrow morning before the bell. Last but not least, Netflix's chart is a little Not fond of this. It might just be because of all the chop that's really taken place in here. The ranges are fine. Don't get me wrong. We're talking about, 50-point range in here on a nearly $1,000 stock. But I don't like the structure so much. I don't know. Consolidation maybe turns into a bull flag, and then over 950.25, I think I would be a little bit more confident because of the way that we know 950 is the neckline of the Head and Shoulders from back over here. All right. That is what I've got for you in today's episode of the Pre-Market Prep. We managed to get through it all as we typically do. Well, where there's a will, there's a way. Let's take a look back at the ES on a 15-minute here. Any big updates to bring? Not real. Oh, this is the rut. Let's go back to the ES. Any big updates? No, just sort of consolidating out on the volatility from the 8:30 CPI report. Mostly sideways response in there. Remember the FU scale. We would need some really, really positive news if this market's going to fly high again. Basically, the market just got one of the most euphoric headlines it could receive, and it's going to have to beat that in terms of expectations if markets are going to fly high. So the game plan still persists. We will look for pullbacks down to this area to possibly buy the higher low around 5,300. We want internals to confirm. We want to see price action confirm here as well. If that takes place, we're rock and roll to the upside. If we just get this, it might be a little difficult to participate in the upside, but it is bullish nonetheless, and I would not be trying to arbitrarily short this up in the upper distribution from the single print divider from yesterday's session. That's going to finish it off for today's episode of the Pre-Market Prep. Big shout out to Alex G in the chat with the 5 gifted memberships just a moment ago. I think we also missed, we had Antonio joining as a floor trader. We had Lawrence Smith joining as a floor trader, and we had Bill T. Don't mind me, carry on with the 1999. Marcus James Reed with the 5. Made a small fortune on RH yesterday, so I guess I can afford some foam for the latte. Appreciate that, Marcus. Hopefully you have another fantastic trading session. With that, I am out of here. Have a green day. Big shout out to all the usual suspects. And of course, we will see you here tomorrow at 8 o'clock again for another episode of the Pre-Market Prep.
Yeah.